And what's the difference between a broker and a lender?
A broker was we were partnering the clients, the borrowers with different banks based on their criteria. So, if it was lower credit scores or higher LTV, whatever, different banks just provide different types of products. Mm-hmm. Whereas a bank, you're typically just dealing with your own products that you're giving the borrowers. So we did that just because the brokerage world, after the Great Recession, they had a property. It was a 160 plus unit that they sold. And I had been talking, and at that time, my father and I started investing in our own apartments. So we had some apartments as well, and we're getting into real estate flips, condos, things like that.
And how old were you when this was going on?
Oh, 24.
Okay.
Yeah, 10 years ago. So started getting interested and had a great job, was really comfortable at the bank. But then my uncle came to me and said, hey, we sold a 160 unit. I want you to meet the broker. So I met the broker, and they closed on the deal, and I saw the closing statement. And I was like, wow. Yeah, it was and at the time, it was like I think $6 million deal.
Hey everybody, welcome back to our roundtable conversation. We're super happy to have you back. And this month we're going to have an incredible guest, which I'm super excited to have. This is Tryf Christoforou. He is my broker at 3CRE. We do residential and commercial, and he's an incredible mastermind. I will say, I was telling him your knowledge is next level. So I'm super excited to have him on. Please introduce yourself. What's up, Tryf?
Hey, what's up, Rachel? Thank you for having me. Yeah. Great setup here.
Yeah.
Amazing.
We transformed the office. It's like
I came in today. I was shocked. So no, it's great. We're here on a Sunday working.
Always working on the weekends like usual, or whatever Drake said.
Yeah. But I'm Tryf. Obviously, you just introduced, but I'm one of the managing partners and brokers here in 3CRE. Partnered with Mike Constantini. And what you want to know? Just kind of where I grew up and all that?
Yeah, tell us about where you grew up and how you even got into
real estate.
Yeah,
sure. So I was born in Melbourne, Australia. Mm-hmm. A lot of people don't know that, but yeah, I was born in Australia. I actually got my U.S. citizenship last year.
Oh, did you really?
Yeah.
I didn't know that.
So I moved to the United States in '95, but before that, I lived in Puerto Rico. Mm-hmm. Then I moved to Cincinnati, and then I actually graduated high school in Singapore, in Asia. So I've been almost to every continent.
But you're Greek.
I'm Greek background, Greek heritage. So yeah, I'm a good melting pot. Almost like a military baby, but my dad worked for P&G. So P&G stood for pick up and go. Anytime they told me to pick up, we had to go somewhere. But no, just lived all over the world and got to experience a lot of different cultures and people and things like that. Came back in 2006 to go to school, went to UC, came back home. Parents kind of followed. Dad was working out of Boston more, but then they all came back here. But no, graduated with a marketing degree at UC, believe it or not. Don't know if I use it much, but who knows about, with the degrees, but there's somehow I learned something.
Yeah.
But no, got into the mortgage business actually. So that was kind of my first step into real estate. Worked for a bank, a local bank here. We were actually a broker first and then became a lender, just with the difference in regulations.
And what's the difference between a broker and a lender?
A broker was we were partnering the clients, the borrowers with different banks based on their criteria. So, if it was lower credit scores or higher LTV, whatever, different banks just provide different types of products. Whereas a bank, you're typically just dealing with your own products that you're giving the borrowers. So we did that just because the brokerage world, after the Great Recession, because I got into it in 2010.
Fun times.
Yeah, they started regulating a lot of the fees and things that were going on. So we couldn't charge as much anymore, and some of the programs weren't available. So becoming an in-house lender was a lot easier to get some loans done. But did that for about 4 years, managed the office there, and then got into real estate just really because of my family. So the building we're in right now, actually, that we rent, is my uncle's.
Oh, I didn't know
and
that.
they've got about 400 or 500 units that they've built ground up. They had a property. It was a 160 plus unit that they sold. And I had been talking, and at that time, my father and I started investing in our own apartments. So we had some apartments as well, and we're getting into real estate flips, condos, things like that.
And how old were you when this was going on?
Oh, 24.
Okay.
Yeah, 10 years ago. So started getting interested and had a great job, was really comfortable at the bank. But then my uncle came to me and said, hey, we sold a 160 unit. I want you to meet the broker. So I met the broker, and they closed on the deal, and I saw the closing statement. And I was like, wow.
That commission.
Yeah, And at the time, it was like I think $6 million deal.
Wow.
Which, they got 3-4%. It was wild.
Yeah.
So I'm like, okay. But I was scared to make that jump.
Yeah.
I was still commissioned, but my commission had become a salary just because I was getting volume and everything from all the loan officers. And at the time, there was 30 plus there. So anyways, it took me about 6 months. Had to study the test, all that, make the jump. I made sure my savings was good because whenever you get into commercial, we'll talk about the differences, but the transactions take a lot longer. So going into it, you may not get a deal for 3, 6, 9 months.
Wow.
So met the broker, had lunch, and then actually Mike, my business partner now, was at that lunch. So the broker brought him to meet me, and we clicked right away. Yeah. He was wanting me to take the test, sponsor me, and I said I'm going to wait a little bit just to keep saving. That was in November of 13, and then in 14, I finally kind of made the plunge. Yeah. Said I'm doing it. Studied, didn't do anything except study and go to those Hondros classes, and then passed, got in.
You passed it on the first time?
We did. I did. Yeah.
I did too.
I did. Yeah. Yeah. Which it's hard.
I mean, yeah.
It's hard. You got to study. But yeah, definitely prepared. That's all I was doing. So if I didn't pass, it would have been a big failure on me. But got into it was a company called Sperry Van Ness, and we were a national, and it was becoming a little bit of an international brokerage, commercial strict.
Okay.
He wanted me to focus on multifamily. So I walk in the first day, he puts me in the office, and then back to back, we're in an 8x8 room, and it's Mike in there. Two loudmouths just going at it, We're very loud in our tone and everything. So we forged a relationship and then really started kind of building our partnership as well. So Mike was there for retail. I was there for multifamily, but Mike had multifamily experience. He had owned 300 units. So really looked to him as a mentor too, because he was teaching me the business, things to look for, maintenance, how to manage your expenses, all that. So it was a natural progression, but our first deal was actually a retail lease.
Nice.
So we did E&O Kitchen in Hyde Park.
Very nice.
Yeah.
Love that place.
So had a connection, again, family owned, and my family owns it, and they had some partners. So they got me into doing that deal. Had no idea what I was doing. Mike was there, so we did it. But that was my first deal, but it wasn't even multifamily.
Wow.
So that took 6 months.
Wow.
Yeah.
Wow, to get that leasing space in.
Not to get the space, to get that deal.
I see.
Yeah, so
Wow.
it was just cold calling, and,
Wow.
and I was driving neighborhoods and learning the business, cap rates, all that. But it took us about 6 to 7 months to get our first deal.
Wow.
And then all of a sudden it kind of started snowballing because all the
Just
work
had to get that first one.
Yeah, you had to get that first one. And then my first multifamily deal was a 6-unit in Norwood.
Okay.
Yeah, and that was an expired listing, called them, and we finally got it. It was for $96,000. That property's probably worth $300-400 now.
Crazy.
Yeah, so just tells you where the market's been. But
Yeah.
that was the background, and then after that, we were still with Sperry Van Ness. Mike and I decided to create the 3CRE brand within Sperry. So we were under the broker and had the national kind of presence with Sperry Van Ness. And then we just kind of outgrew it the next 3-4 years and felt we could really go independent. And Mike got his broker's license, and then we had a vision of wanting to create our own brokerage, our own culture, our own people, and now we're here, and I think we're at 38, 39 agents through 3 cities.
Which is awesome. Yeah, we're in Columbus, Cincinnati, and Nashville,
yeah.
which is really awesome. So did you feel like you naturally kind of gravitated to multifamily because of like your experience with working with your family and your dad and things like that?
Yeah. So I had always been interested in multifamily, and also when we were kids, looking back, we were doing maintenance, so I would go with my cousins and we would clean gutters, and we were on the roofs and, just different things, so always kind of, picking up the dumpster or the trash around the dumpster and just different things like that. So, we had done that, and I liked it because I could still relate to it because it was still residential.
Yeah.
The lending process is different. The way you underwrite it's different, but people still need a place to live.
Absolutely.
And investors know that, so I could relate to it a lot easier than doing a retail commercial. Now over the years I've learned how to kind of do every asset type,
Right.
because we're very horizontal in that sense. But multifamily it was very transactional for me. Plus, it's probably one of the hottest assets out there.
Right. And so in commercial, multifamily is anything more than 4 units and up.
Yeah.
So what
5
kind
plus.
of 5+? So
Yep.
what kind of things you probably see 30 units. Like, what's the most you've done for multifamily? Biggest?
200 plus.
Wow. Okay.
Now we're doing a few deals in some states now that are going to probably be maybe 200-300
Wow.
as a portfolio.
Wow, nice.
But I've done everything from a duplex to that and everything in between.
Yeah.
So the typical multifamily you see is 30 to 60 units as a community.
Okay.
Once you go past that, it's either a large community where they've got amenities like clubhouse, things like that. But your mom and pop investors typically maybe go up to 50, 60 units
Right.
as they scale.
And that's a big responsibility.
It
As
is.
like an investor, like imagine having 50 different units, tenants, all the things that come with it. And so you kind of talked about like the underwriting and the financing and how the length of, commercial deals are so different. Like residential, you can get a client, you can get them in a house depending on how their urgency is within a
Yep.
couple weeks. You close in about 30 days, you get your check, and then you keep it moving.
Yep.
But kind of tell us like the lifeline of like what a commercial deal kind of looks like.
From the sell side or the buy side?
Whichever you prefer.
Okay, we'll talk sell side.
Yeah.
So and we have residential here. So when you do a residential, like you said, there's different motivations. It could be maybe they're going through a family issue, like a divorce, or maybe someone passed away, so a family's kind of taken the property. Maybe they're moving because they've been relocated. So it's a much quicker decision, and usually people don't think of the tax implications
Right.
as much. When we're trying to deal with a listing on a multifamily, there's usually a lot of channels we have to go through to even just get to the listing. So number one, making contact with the owner.
Right.
And that's a relationship. There's quite a few multifamily and commercial brokers out there, but why do they want to connect with you?
Right.
And it's the same thing on the residential side, I think, as well. But once you connect with them, then we have to go through their accountant to look at the tax implications. Do they have to do what they call a 1031 exchange, where they take the proceeds, don't touch them, and then you have to find them another property, which puts pressure on the broker?
And what's the goal of a 1031 exchange? We hear
It's
this
just a
lot.
way to kick the can down the street for paying a capital gains tax. So it's basically if you buy a property or you sell your property, you have to buy a new property for $1 more than what you sold it for.
Okay.
So and that
Or you get like what, a 30% tax rate?
depends
or
on your
something?
bracket, but
Depending.
usually it's somewhere between 22 and 32%.
Which hurts.
It hurts. It hurts. And when you have 50, 60, 100 units and it's a $8 million deal,
Yeah.
it can make a big difference
Yeah.
on what you're paying for taxes. So we have to go through their accountant. If it's in a partnership, we have to get all the partners involved. There's usually an operating agreement. Who's the decision maker? You have to learn who that is. Attorneys are usually involved. So it's a lot longer of a process. Typically, I've had listings where it took me 2-3 years to get it.
Wow.
And one of the larger deals Mike, I, and some of the group did here last year, we had worked with them for 3.5 years before
Wow,
we
before
took
you
it to
even
market.
got the listing.
Before we took it to market.
Wow.
Yeah, they weren't ready yet. They were retiring. Then their accountant said no. It's going to have a huge tax implication. And then with COVID and things like that, they were just ready to. But we had to get everyone on board before we even listed
lot.
it. So just to get it to market was 3 years.
Right.
And then after that, the deals typically take 60 to 90 days
Wow.
from start to finish once you're in contract.
Wow. How do you maintain that momentum of constantly touching? Because I think a lot of people are very short-sighted in our leads. We talk to people and then it's like, okay, if you don't talk to me, are you not ready to pull the trigger in a couple months? How do you maintain that with a 3-year kind of courting?
A lot of lunches, a lot of golf, a lot of drinking. But no, like I said, it's a relationship.
Yeah.
And that's really what you have to build. Same goes for residential, but like you said, it's much more transactional. Residential, your 30, 45 day kind of turnaround times. Whereas us, like I said, it could take years, and you just have to be a people person.
Yeah, absolutely.
And people do business with people they like.
Exactly.
But yeah, it's a lot of lunch. It's a lot of expenses up front. It is, and you're paying for that relationship, not just money but time.
Yeah, absolutely.
So you've got to be continuously originating and managing those deals because once you get them, then the real work begins.
Exactly.
Just getting to the listing is the easy part. Then you have to underwrite it, make sure it's priced right, take it to market, make sure you get the highest and best offer.
And tell us about this underwriting process or what that looks like. Because in residential, we don't really do that. It's
a comp approach.
Comps, yeah, for sure. But it's definitely another level.
And that's been difficult the past year too.
Yeah.
The
Everything's
residential side, it
changed.
changes. We're going through a little bit of a, I would say, pricing slump, or it's stabilizing compared to where it's going. So you can't look at 6 months ago. It's a different market, especially what's happened this year. But for us, underwriting, it's the same thing. But any asset we do, commercial, and when I say commercial, I mean retail or office,
Right.
industrial, multifamily. Anything you underwrite, you just need a P&L. So you need a rent roll.
That's a profit and loss.
Profit and loss.
Y'all be
sorry.
throwing the acronyms.
Yeah. Profit and loss. You need a profit and loss. You need a current rent roll. You want a year-to-date profit and loss just to see where it's trending this year. And then you also want historical. So you're going to look at usually their Schedule E's on the tax return. So you can kind of see historically how the property's been performing as well. But we have to analyze that. What kind of improvements have they done? Looking at that as a new roofs, windows. Now that doesn't necessarily add value, but they call that a capital expenditure. So going into when you want to sell that, if you have an office building and they just put a brand new $200,000 roof on it, that's something that the new buyer doesn't have to budget for.
Worry about.
They don't have to worry about. They don't have to budget for it. So we're underwriting P&Ls constantly, and then we provide a cap rate, or the sales comp approach provides cap rates in the area. So,
and what's a cap rate for?
Yeah, it's called a capitalization rate. So what you do is it's a percentage. It's basically the percentage of return you get. So let's say a property's bringing in $100,000 profit after expenses, no mortgage, but after your expenses. And it's a 10% return. That property's worth $1 million.
Yeah.
So you take the 100,000 divided by 0.1, and then you get to $1 million to keep it simple. But all the different locations have different cap rates. So if you're buying a property in Montgomery, that's an apartment complex. It's typically a little bit higher clientele, higher rents.
Properties, Class A.
Yeah, Class A. Yeah. So you're in Class A location versus somewhere that's in I would say like Wilmington, Ohio.
Sure.
That may be it's more rural. There's not a lot of population there. There's not a lot of density. So that might be an 8-9 cap. And the reason there's compared to Montgomery, that might be at a 5 cap. The reason there's a difference is because it's the rate of return. So if someone's willing to invest there, they want to get a little bit better of a return because they're taking a bigger risk.
Right.
So the higher the cap rate, the lower the price. It's an inverse relationship.
Nice.
And your return's higher.
That's what I'm saying. These numbers.
Yeah.
I told y'all he was a mastermind. No, because commercial is its own world, and it's like all these numbers. And I think I'm learning too. I was like, I've never considered myself a numbers person.
Sure.
I mean, I was like studied communication. I'm a liberal arts major. I loved it, and I have not taken math since probably like freshman year of college. But no, being in real estate and being around you all, I'm like, oh, you have to be a numbers person in order to make this work, in order to be a good advisor, as we say. We don't like to call ourselves agents in our brokerage. We like to confirm ourselves as advisors. So
you have to be good at numbers, not only to help them acquire the property, but they also want your advice on where you can take the property, because it's an investment.
Absolutely.
And your investment is only as good as yesterday, because when someone buys it, then the real work starts for them, because it's a cash flowing property.
Right.
Well, and again, multifamily, office, industrial, retail, shopping centers. If a tenant leaves, it can make a huge difference now in your profit.
Absolutely.
So you have to budget and understand where rents are, where can they take it, are the current tenants below market? So one thing we do is we analyze what they call loss to lease. If the apartment building's in Montgomery and they're averaging $800 a month, but all the competitors are averaging $1,200 a month, they may be buying it at a premium today, but you could tell them, hey, you can raise your rents $400 a month.
Right.
Well, you can't just raise rents. What do you have to do to raise the rents?
Absolutely.
What kind of conditions is the property in? Have they updated the kitchens, the baths, all that? So then going to the investors, you have to say, okay, you have to invest X amount of dollars per unit. They have to know those numbers because they want to get a return. So is it worth it for them to invest $10,000 a unit to get $150 more a month, or $200 or $400?
Absolutely.
That's the calculations they have to do. So we as the advisors have to be ready to provide them that data and say, okay, if you do this for the next 3 years or 5 years, raise the rents here, your property, as long as market conditions stay the same, could be worth another $1 million.
Right.
And that's where the value
That's the
add comes
difference.
in.
Yeah, because you have to give them an opportunity.
So it's not only where the property currently sits, but they also look to you to kind of forecast where they can take it. So it's a lot of responsibility.
It is. I was gonna say that it's a lot of like knowing. You have to know your stuff.
And like homes, real estate is typically someone's biggest investment. It's the most money they've put down. It's usually their largest bill. When you buy investment properties, now you're taking someone's money and saying, hey, take your, and the down payments are 20-25%.
Wow.
So if you're buying $1 million property, you're putting $250,000 down.
Wow.
So that's
not to be played with.
It's not to be played with, and that's why you really have to know your numbers, come off as an advisor, because they're trusting you to. $250,000 is a lot of money.
It is.
And it's very difficult for it took them a lot of work to make that. So they're basically saying, hey, Tryf, hey, Mike, hey, 3CRE, come here. here's 250. Where can I put in? How can I make an investment on that?
Wow.
And it's a big responsibility, and we want to make sure we're doing everything in our power to not only tell them what the benefits of the investment are, but what the potential downsides can be too.
Right.
You know.
So how do you, because that's so many moving parts and so many different things, like what kind of thing you have to constantly stay abreast on, like what's going on in the real estate, and you encourage us to do that on residential as well. So what kind of things do you do to stay current of what's going on and the like real estate ecosystem, I guess, if you could say?
Every morning I wake up and read the Wall Street Journal, USA Today. I start just reading kind of the money markets. I have CNB or which one's the MSNBC? I think is the financial channel. I have that on all day just to see kind of what's going on in the market. So the past few months have been very shaky.
Right.
You know, stock market goes from 32,000 to 28,000. Bitcoin crashed the past month, which took a lot of people's money away. A lot of people have been using crypto money to transfer that back to real estate.
Nice.
So, now that it's crashing, they're freaking out and pulling money out, and they want to go back into real estate. But you got to know what's going on in the market. Rates, we started the threes in January.
It was fun.
Yeah, we started the threes in January. We're at, I think, 6.6 now. But
it was like 7 last month.
We hit 7 a couple months ago or a month ago.
That's craziness.
So just being able to manage that and telling your clients kind of how that affects them. You know, in the residential, we've seen it, makes a big difference on your monthly payment.
It does.
And your buying power.
Yeah, we've seen that a lot.
Same thing with investments. It's not necessarily the buying power that goes down, but their return goes down. So if they were making, 10% return, it might be 6 now because of that interest rate increase, because that cash flow is going towards a mortgage.
Right.
So, it's been shaky at best. I was more worried this year in terms of what was going on with the market than when COVID hit. Obviously, when COVID hit in April, May, when they shut the world down, for 2 months, we were nervous wrecks. We didn't know what was going on. But then real estate just became so hot. I mean, all the prices were going up because there was so much money in the economy. Now it's been a different challenge because it's affecting their pockets in terms of rates and things like that. So we'll see where it takes us. But you've got to wake up. You've got to read the news. You got to know what's going on in the economy.
Absolutely.
What legislation's being passed, different things like that. Because if you don't, again, we're able to transfer that knowledge to the client.
Yeah.
And when the client feels comfortable,
that's a value
again,
add.
It's a value add for them.
Absolutely.
And you're truly an advisor, and they're not going to go anywhere else.
No, and that's the thing. You want somebody who feels trusted and safe and understand that you have your pulse,
finger
on the pulse.
And I think another advantage to our brokerage is that we've all owned our own investment properties. So it's not there's some brokerages out there that, a 20-year-old kid's telling them how to run a multifamily building that's never owned. Well, from a leadership standpoint, and a lot of our agents here, they're starting to invest now. We've had investments, different things like that. So the fact that we have real world experience to say, hey, I can walk into a building and tell you this is wrong, this is wrong. We've got Andrew here who does our asset management. You can literally take him through any building and he can put you a quote together for the cost it's going to be if a roof needs replaced, or we recently had a big electric job that needed to be done that was $300,000-$400,000 to upgrade it. Wow. Andrew was there, the whole way trying to put quotes together for us, because he's got real world experience. So again, a value add opportunity to the client.
Absolutely.
Where we're able to, not only get them into the deals, but then also help them get some of the CapEx budgets put together. We know we have a good pulse of what's going on in the market. We've got great lending partnerships as well. On all sides of the business. So being integrated with all that, it just helps important. The client. Yeah.
And it just comes, I think, naturally, just making sure you're being very intentional about what you put your mind and you're consuming essentially is I think is key. Yeah, I think it'll come. I'll get there. I'll be reading Wall Street Journal as soon as I roll over these days. But for now it's a little podcast.
But we've had a lot of meetings too about rates and how to sell that and what to tell the clients. And one of the quotes we're using now is what
date the rate.
Date the rate, marry the property,
marry the house,
and there's deals coming up, and agents are having to do agent work again.
Exactly.
On all fronts, and I think like you said, if we've got that experience and we know how to negotiate and make sure we have our client's best interest at hand, whether you're representing seller or buyer now. It just adds value to you as an agent.
For sure. And that's one thing I really do appreciate too. Is I call you a lot, like, Tryf, I don't know what to do, blah, blah, blah. Like, you're a very strong negotiator, which I really appreciate. And I want to have that confidence as I continue to grow in real estate. So what kind of advice do you have for somebody? Because you always talk about, and I think your family and your father put a lot of like emphasis on negotiation. I kind of joke that you were probably negotiating at the age of like 3 or something. So what makes a good negotiation from a real estate perspective? How do agents become good negotiators on behalf of our clients?
I always say a good negotiation is when both parties leave unhappy. And that's really the key to a good negotiation, because that means both parties had to give something up. And in real estate, I think there's battles and there's wars. And sometimes we get so focused on the micro things, like a GFCI in our home, or sometimes with apartments, there's a $800 fix that but it's like, we're putting you in this investment because you can make $800,000.
Right.
Don't be worried about that $1,000 repair.
Yeah,
you'll get it back, I promise.
Truly.
So, and some people are not wired that way. Some people want to win every battle, but then can end up losing the war. I think in negotiating, you just gotta, what's the macro issue?
Exactly.
What are you really negotiating? Once you kind of have the objective there, then figuring out how to win that macro objective is key.
Yeah.
And that's what I always try to tell clients. I've had clients like, oh, they got to give me $2,000 for this. I'm like, oh my, it drives me nuts sometimes, because I'm like,
nitpicky.
They're already giving you an amazing investment or amazing deal.
Yeah.
So let's not nickel and dime them. And commercial, the negotiations are a little bit more macro than they are with residential.
Sure.
That's why I don't know how you guys do it sometimes. I see some of these addendums are like 42 items.
Oh my gosh, yeah.
So we're typically looking at capital expenditures like roofs, windows, the mechanicals, how's the electric.
It's not paint color.
It's not paint color. It's not GFCIs. It's not, because we already have a maintenance expense line item when they're buying the property. So you're going to have maintenance.
Right.
You're buying an investment property.
Absolutely.
And that's any property, office building, same thing. A roof's going to leak sometime. So that's already built in. We've already built for that. So, I think from a commercial standpoint, we typically negotiate in the tens of thousands if there's a major kind of problem, whereas residential, some of these agents, they want to win every micro little issue, and
like $600.
Then you get an addendum with 42 items, and you're like,
no,
I'm not even interested. Here's $1,000 if you want to take it or leave it. You know?
And I feel like people, when you do the nitpicky stuff, it makes you look, it doesn't always make you look bad, but it doesn't show as much as a cooperative agreement at times, because people are like, oh, why are you asking me for this? It's like, okay, we could just establish this, but
and I think in the beginning of any deal you get into, I think kind of setting that tone with the client, whether seller or buyer, that's what really helps on negotiations too, because you guys have experience. You can walk through a home and say, this is going to come up.
Yeah.
Let's be ready.
Exactly.
So we'll price it at X, or we'll price this office building at X, but these things are going to come up. So if these things come up, you be prepared to give something. And if you can coach them, buyer and seller, depending on who you're representing, then it makes the negotiation a lot smoother too.
You got to set the expectation.
You got to set it up, because every property's got something.
Always.
It's real estate. Yeah, always. As long as it's nothing major, then you're okay. But I think the other thing is, don't be afraid to ask.
Right.
If you don't ask, you might not. You
The
won't
answer is
get
no
it.
if
So
you don't
again,
ask.
depending on who you're representing, you want to ask, and then worst case they tell you no. Best case, you look like a hero to your client.
And that's what you want at the end of the day, is to look like a hero.
Yeah. So
Love it.
with a negotiation, I think, like I said, as long as both parties leave unhappy, has always been my mantra. Then it was a good negotiation.
You have a book that you referred to, or you told
Starting
us
with No.
Okay, that's what it is. It's on my list. But yes, that's another.
Yeah.
Gotta start book club, Tryf's book club.
yeah, and it's a really good book. It was given to me by my dad. My dad was head of negotiations and mergers and acquisition for Procter and Gamble. So he looks at our deals and he's like, okay, this is, they're doing $1 billion deals sometimes,
Wow, that's wild.
So, that was one of his favorite books. And then I read it, and everyone always thinks both parties have to win. It's got to be a win-win and things like that. I think it's sometimes lose-lose. Because then, like I said, if you go from there, you're okay. But in saying the word no, people will push and push and push. And again, it depends who you're representing.
Right.
But if you're representing a seller and you got a great property and you've had 10 offers, it may make our job a little bit longer if we have to go back on the market and get it under contract, but you could say no sometimes.
Absolutely.
And typically if they're emotionally vested or they know it's a good opportunity, because people will push until you tell them no. So that's why I like that book. Start with the word no.
Noted.
Yeah.
Noted. Add it to the list.
Yeah.
So I want to. I told you to. Like, you talk about so many different deals. I know you've done a lot in multifamily and commercial in general. But do you have any horror stories of like any deals, or even like clients? I could imagine that level of clientele is very different than working with.
It's an interesting clientele. When I first started, I was dealing with a lot of first-time investors because you're new to the business. I was 25, and a lot of 50, 60-year-olds didn't trust me with their investments. Sure. It's been funny now. The average age of even our agents at 3CRE has really come down. I mean, I'm probably 10 years older than most people here, and I still view myself in my 20s. But I think the average age of the investor has come down too.
Yeah, for sure.
So you're not dealing with that 70-year-old anymore. There's 30 and 40-year-olds buying real estate all the time and doing syndications and things like that. But a horror story recently was with multifamily. Multifamily is all types of horror stories. I've had guns drawn on me when we're doing inspections. They were like, there was not a notice on the door when it's right there on the door. Obviously, with apartments, you can run into like bug issues. So I don't really walk in many people's apartments anymore. Just because you go home and you're like, okay,
for all the clothes in the
trash or straight into the laundry on high heat, kill everything. So that's been, whenever you hear the tenants say I have bed bugs, you're like, okay, definitely not going in there. And then all of a sudden you're itchy and it's in your head.
Stop. See, I'm itching now.
Recently we did an inspection, and it was a sad story, but we were doing an inspection on 30 units, and I'll never forget that this kid comes up to me. He's not a kid, he's probably 20-some years old. Blue hair, kind of caught me off guard, and he's like, "Hey, can you open unit 1 for me?" And I'm like, "No, I'm not, not because I had all the keys." And he's like, "Well, my father has been sick, and we haven't heard from him in 4 or 5 days." And we walked past this unit 20 times, and we were getting ready to do inspections on it. And I said, "Hey, if that's true, because you don't even know if that's his dad, you don't know if he wants me to open the door, he's gonna steal." So I didn't know what was going on. So I'm like, tell you what, if you haven't spoken to your dad, why don't you call the police? And I'll call the landlord, because I'll let them know that unit number 1's not responding. So we get there, and the cops finally come, and they hadn't heard from their father on Thursday. It was now Tuesday, and father was passed away, laying on the couch over there. But once they opened that door, that from a horror story, that stench was crazy.
Oh my god.
Yeah. So we're doing inspections. The buyers are there. I'm like, oh, okay. In my head, I'm already thinking the math. I'm like, we got a vacancy. But they wanted me to open the door. The cops wanted me to open. I was like, absolutely not, because if I see that, or if I smell, if I directly smell it, that'll affect me.
God.
So that was an interesting one where that had never happened to me, where someone was actually passed away in their unit. But I've had from a funny story, I had a pit bull attack me once.
Shut up.
Yeah, and actually one of our agents, Sean, he bought an investment property, and that's how I met him 5 years ago, from 4 or 5 years ago. And there was a tenant there who was a little crazy, and he thought I was buying the building, and every time I came around the building, he tried swinging a chair on me. Because he thought he was going to get kicked out and all this kind of stuff.
Oh my god!
So we did inspections with Sean, and police I called the police, because this guy was.
Gotta get an escort.
Yeah, he had a pit bull chase after me. He came after me with a chair. I'm like, I'm not even buying the property. Like I'm the agent. So then Sean buys the building. I'll never forget. About maybe 30 days later, it closes. He bought it on a Thursday. I'm watching the news Sunday morning, just drinking coffee Sunday morning, watching the news, about to go to the Bengals game. And I'm watching the news. It says fire in Norwood. So I'm like, rewound my DVR. I'm like, fire in Norwood. We'll probably 222 Lawn Street. I was like, oh my God, Sean's building. I called Sean.
Literally just had sold it.
Just sold on Thursday.
The
guy set the building on fire.
That same guy?
They did an arson deal, or one of the tenants got in a fight. He was upstairs. They had to rescue him, but he basically poured gasoline all over the hallways in the basement, lit it up. And Sean got a brand new building with insurance money. But going back to a horror story, I called Sean. I'm like, Sean, what happened? He's like, been a rough morning. I've been here since 5. I'm like, all right, I'll call you later. Then I find out the next call I get's from Sean's insurance agent, who I recommended to him. They're like, "Have you ever done a deal with Sean?" I'm like, "I haven't." They're because then they were investigating Sean for setting his building on fire
to get the insurance.
So that was like a funny / horror story. But now Sean's happy because Sean got a brand new building.
Wow.
I mean, they gave him like 3x what he had paid for it from an insurance value, and he redid all the units. So I'm like, Sean, I can't promise you these returns every time.
No, every time.
Yeah, because you're not gonna get a building lit on
That's
fire. And
wild.
do that. But that's kind of like a funny horror story, but we've definitely been in some situations.
I can imagine.
For sure.
See, I'm like, that's too messy for me. Y'all can keep it with the can keep it with the multifamily. But oh my gosh, so many things, so many adventures that you have.
A lot of adventures, especially multifamily.
Yeah.
Retail tenants, it's always are you buying the buildings? Why are you coming into my business? It's a little bit of a different resistance, things like that.
Yeah.
But yeah, that's we've had some very, very interesting stories through the years. There's I can tell you 100 stories.
Gotta write it in the book. You gotta stay tuned for that.
Yeah.
But
that's another podcast.
I know, really, truly.
Yeah.
So just kind of wrapping up. Thank you for that. I was like, I just needed to hear that from my own personal knowledge because I think it's interesting. There's so many horror stories that come with deals across the board.
There is.
So kind of just wrapping up and giving somebody some knowledge because everybody wants to get into duplexes now. That's like everybody wants passive income, and it's not passive income at all. Everybody's like, oh, I'm just gonna sit in Mexico and have money coming in.
Yeah.
A lot of people are gearing into this multifamilies, duplex, triplex, quads, and eventually working their way up.
Yep.
So what advice do you have to somebody that's looking to invest in a multifamily property? What kind of things should they be prepared for? What kind of steps should they take?
Great question.
Like that.
I always tell people, number one, if you do buy into a multifamily, it's got to be a home run deal for them. Mm-hmm. When I say home run, they have to be comfortable with the area, the location, the tenants, and all that. You're going into business with your tenants. Mm-hmm. That's something people don't realize. Mm-hmm. Everything looks good, like we were saying. We underwrite, and you put it on paper, and it looks really easy, maintenance, expenses. But you got to really know going into it who's the tenants, who am I dealing with? Are they subsidized programs? Are they not? What kind of conditions the property in? So that goes back to the inspections and all that, and just making sure you have reserves. Mm-hmm. Now a lot of people are doing to start the house.
Reserves is like money saved.
Yeah, money saved on the side. So for the money coming in, you're putting 5-10% to the side, just in case there's an emergency.
Yeah,
because if the heater goes out, that's $5,000. Mm-hmm. Do you have it? Do you not have it? Then you're running into, okay, if you don't have the money and you're trying to figure out how to get heating, now the tenants don't have heat. Mm-hmm. Now they can report you.
Mm-hmm. And not pay their rent.
It goes into escrow. Now you're not bringing money in. So I think that's the first piece of advice, just kind of knowing what the investment you're going into is. Mm-hmm. And a lot of people, like you said, I'm on the beach and things like that. There's different types of investments where that's a passive investment. Like you can own a Walgreens, for instance, and they just pay you a land lease rent, $3,000 a month, $4,000 a month, and that's the rent, and you don't have to do anything. They maintain the property. But on multifamily, it's very labor intensive.
Yeah, incredibly.
You're collecting rents, you're dealing with maintenance,
working with tenants.
A lot of people do the house hacking where they live in one of the units, so your tenants are literally in your home.
You can knock on your door anytime when they want.
Yeah, and, people think it's a good idea, and that's how they kind of get into it. But then they're like, "My God, I don't want to be near my tenants," because they constantly think that there's no separation, and and then also, what kind of investor do you want to be? Do you want to truly be passive? So then, finding a property manager, making sure that manager's protecting your investment. That's a job in itself. If you want to be an active investor, up to how many units? Because once you get scaled, let's say you start at 2, 3, 4 units, and then now you're at 40, it's a different ball game too.
Truly.
You got to have a maintenance guy. You got to have maybe a front desk person helping you with collecting rents, putting the things into the system. So, it just depends. But I would say, I think real estate's the safest type of investment you can make. It's always been.
Yes.
People have been doing it for years. It's a physical asset. You can literally touch it, hit it. There's a location. There's an address. So real estate over the years through every cycle has survived, and people thrive in it. There is some dips like any investment, but I think, as an asset, it's a pretty safe asset. And whether you're investing in stocks, bonds, crypto, whatever, I think real estate should be a part of that portfolio as you grow. And I always say people buy real estate not to just create income, but also to create wealth. As you build that equity, then your personal financial statement, as the way the banks look at you and creditors and things like that, you're building wealth for yourself too, because you own an asset.
Absolutely.
And you can depreciate it. So
the value just in the past couple of years, like people have doubled their investment in real estate, and you can't do that with your money sitting in a bank account. You know, an interest-bearing bank account.
You're maybe getting 1% in the savings. They're advertising bonds now at 3.5%. You know, and that's still on the low end. The stock market's been very up and down, like we were talking about previous. So you know, real estate has had a steady growth, rents and everything, and you know, like I said, I think it's a safe asset. Even if the market dips, people still rent.
Exactly.
Whether it's office, retail, warehouse, multifamily. People still need to place their businesses somewhere.
Absolutely.
People still need to live somewhere. So maybe you're not renting them at $1,000 a month, but now you're at $950 because the market's dipped a little bit. You're still going to get income.
But you can bounce it back too once the market swings back up.
Exactly.
Beautiful.
Exactly.
And I love the creativity of real estate. I think that's my favorite thing. It's just the knowledge and the vastness of it is just unending. So
yeah, and going back to what we were saying with commercial, you know, commercial is really anything that's not residential. So
anything.
Wild
West.
We've done crazy things. You could do, land deals, office, industrial, retail, multifamily. You could do built-to-suit deals. You could do land leases. We sell businesses. You know, I mean, the commercial really is just, it's unbelievable because you can get so creative with some of these deals.
Yeah.
And then really just seeing the development too. You could do development.
Development's a whole other world.
It's
I'm learning about that too.
Other world.
That's like new builds.
New builds and things like that. So I mean, you know, selling that piece of land and then looking at it later, they bought it for a couple $1 million, and now there's a $30 million project on it. It's cool to see that as a broker agent too. To be real, you know, and it makes you feel good.
Absolutely.
You know?
And I think one thing is cool is it leaves a lasting impact if you do get into development.
Like
you can see exactly where I started. Oh, I sold this building. I sold this house to this family or however. Yeah. I think that's definitely what.
And every major real estate player starts with the same story. I bought a duplex, or I bought a single family that I rented. I house hacked. I turned 4 into 20. I turned 20 into 50. 50 to 200. In terms of units. Or now I own shopping centers. I'm building them. I'm building industrial. You know, that story
always starts with a duplex.
It does, and I think because your barrier to entry is lower to get into investment, and then as you scale and build wealth, a lot more opportunities come and things like that. So that, every successful real estate person I've spoken to started with a duplex. You just hear it.
That's not even like a mixtape.
I lived in one unit, they lived in the other. I did an FHA loan, residential, because 1 to 4 units you could still do residential loans.
Absolutely.
So you can put 5-10% down, get your home, and then say, okay, I'm going to live in a new one now. I'm going to rent those 2 out and get another home.
Keep it moving,
then build your portfolio.
Lovely.
So it's awesome.
I love it. I love it. What are you working on that's exciting for you at the moment?
Yeah. Building the brokerage. I think that's been really exciting. We've doubled up every year, and like I said, we're at 40 now. We got a new permanent home in Columbus, so we just got a new office recently in September. Nashville, we opened in May. The residential arm's been exciting. I think the energy here is amazing. So just building the brokerage with Mike, and looking at how are we going to tread these new waters with the economy and the rates and all that. But I think we've done a great job. We want to add more people. I think the more people we can add, the culture and bringing people in and letting them prosper and be themselves is going to be big. Personally, I'm doing a development right now. So we're doing that in Dayton, Kentucky.
How many units?
It's going to be 98 condos.
Wow.
But it's like a 5 to 6 year project.
That's huge, though.
It is. We've been working 3 years on it before it even got built.
Wow. Even getting like all the
just getting the permits, and we got some tax abatements and things like that. So that's been exciting because I'm learning the new development, learning how to build, how cost works, how those kind of loans work as well. And again, I can take that knowledge now, and we get a land listing and say, hey, this is how it works. These are your soft costs, hard costs, different things like that. So being able to bring that expertise, it's added more knowledge to my base too. But yeah, I mean, we're a lot of exciting things. I think the growth is good. Real estate market's good. Like I said, we're treading some different waters, but I've seen them.
But waters nonetheless.
Waters nonetheless, and all you can do is move forward.
Exactly.
And like I said, the strong survive.
That's what I tell myself.
Hopefully we'll be here, and like I said, we're licensed now. We just got our license in Kentucky, so we just got new. We're trying to get kind of a regional presence now with Ohio, Kentucky, Tennessee, maybe Georgia's next, Florida. So kind of going along that 75. Yeah. I know Rach wants Atlanta.
I mean, I'll be trouble, but anyways, that's fine.
but yeah, it's all good. It's all good, positive stuff.
Yeah, it is absolutely. And I appreciate you so much for being on my roundtable and using your knowledge. And I always appreciate you're such a great coach and motivator for me in my real estate career.
No, it's an honor, and I appreciate you bringing me on. And thanks for having me on.
Of course. Tell the camera, say where we can find you if we want to hit you up for any other follow-up questions.
3CRE.com, 3CREhomes.com, Montgomery, Ohio. You can find us, and phone number is 513-745-9333 for the office line. So
awesome.
You can find us if you need anything. Let us know.
Awesome.
Any real estate needs, we're here.
Awesome. Sounds good. Thank y'all so much for tuning in for our follow-up conversation with Tryf. We look forward to seeing you on the next one.